Hi, my name is Bill Sorensen and I'm Managing Director of Business Valuation, Inc. And today I'd like to talk to you about fair market value, which is the standard of value that's most common when an appraiser provides an opinion of value of a going concern or a holding company. More importantly, I want to talk about a specific issue that we see that advisors should always consider when advising clients in structuring their membership agreements or shareholder agreements. The standard of fair market value defines that as a willing buyer, willing seller, arm's length transaction, all the facts known. Given those circumstances, what would the price be paid between those two parties? The issue that we see most often is within intercompany exchanges, whether it's a family business and one brother buying out another brother's shares or partners buying out other partners' shares, when there is a minority interest at stake. So, for example, a 25% interest of one partner being sold to a partner who has a 50% interest. In a fair market value standard with no other directions, the appraiser has to assume the buyer is an unrelated party, meaning we can't assume who the buyer is. So in that case, we can't assume the buyer of the 25% interest is the owner of a 50% interest. So that 25% interest is subject to a lack of control, because as a buyer that is buying a 25% interest, they have to consider the fact that they can't encumber the business, they can't control the operations without another partner providing a majority to make that decision. So when that's the case and we apply a minority discount, quite often you have a partner saying, the buyer of that interest is going to have a majority control. Why is my interest being subject to a lack of control? With clear definitions in employee shareholder agreements, employee agreements, shareholder agreements, or membership agreements, you can avoid those issues. Perhaps you might say fair market value without lack of control, discounts considered, or some other way to navigate that. The question is, what is your client looking for, and how should that impact the definition of value when an exchange occurs? If you have any questions about the fair market value standard or any other valuation issue that would help you advise your clients, please give me a call and I'd be happy to discuss it with you.